Friends, I want to discuss a very relevant topic. What is the difference between deferred payment and a loan? For those who are not familiar with the subject at all, let me explain. Loans are given by banks, while deferred payment is provided by the property owner when signing a purchase and sale agreement. Many people think that deferred payment is the same as a loan, just without interest. But in reality, there are a lot of differences. Let's break it down. First, assessment of your solvency. I hope it won't come as a surprise to you if I say that banks don't just hand out loans to everyone. Only solvent people with a good official income can get a loan. Most Russian immigrants who have moved to live in Montenegro cannot qualify for a loan in Montenegro precisely because they lack an official income. Of course, some people do have such income, but the vast majority of our compatriots hide almost all of their earnings. Most people are officially employed at their own company on a 0.25 workload with a minimum salary. But if such a person comes to the bank and says, "Friends, I earn 62 euros and 50 cents a month. I'm short 50,000 euros to buy an apartment. Can you help me?" Well, I think you can already guess what the bank's answer will be. In other words, a person's solvency is important for obtaining a loan. But when it comes to installment payments, solvency doesn't matter at all. Because ownership rights are transferred to you only after full payment. And you're not asking the seller for money, unlike with a loan where you're asking the bank for money. On the contrary, you're giving money to the seller. So by giving you an installment plan, the seller isn't taking any risk at all. Only the full amount of payment, only the sum, the full amount of payment will be received not today, but a little later. Second, expenses. If you take out a loan, you pay interest. I won't name any specific amount, since it all depends on the bank, your age, and the term for which you take the loan. But I will mention the minimum I've seen, it's 4.8% per year. Unlike a loan, an installment plan is provided without interest in the vast majority of cases. Of course, there are exceptions. If you request a long-term installment plan, they might tell you. In that case, it will be a bit more expensive. Third, terms. A loan, by agreement with the bank, can be obtained for various periods. There are short-term loans and there are long-term ones up to 10 or even 20 years. An installment plan, in the vast majority of cases, is short-term. It is rare for anyone to offer an installment plan for more than a year. Of course, there are exceptions, but as a rule, only for elite and very expensive real estate. Fourth, chances of approval. Whether you will get a loan from the bank or not is something you need to discuss with the bank. Here, the key issue is your solvency. As for installment plans, almost all property owners offer them, that is, with very rare exceptions. Fifth, the right to use the property. If you take out a loan from the bank, you can use your property immediately. As for installment plans, not always, but almost always, you will only get the right to use the property after full payment. In other words, you can't just make an initial payment. You've reserved the property for yourself, so it won't be sold to anyone else, but you'll only be allowed to move in after you've paid in full. There are exceptions, but not very often.